Did you know that when you deposit money in a bank, it doesn't just sit in a vault waiting for you? Yes, you heard it right. That hard-earned cash you entrusted to your bank? It's out there, working overtime, but not for you. Banks use your deposits to make loans to others and earn interest. Essentially, they're making money from your money. This might sound a bit scary, but it's just the beginning of what banks do with our money. Here's another startling fact about banking. Banks are only required to keep a fraction of your deposits on hand. This is what's known as the Fractional Reserve Banking system. Imagine you deposit $100 into your bank account. Under this system, the bank might only keep $10 or a fraction of that $100 in reserve. The remaining $90 can be loaned out to other customers. This way, banks earn interest and make a profit. However, this could pose a risk to us, the depositors. If everyone decided to withdraw their money at the same time, the bank might not have enough cash to cover it all. It's a bit like a financial game of musical chairs, and we're all hoping we're not left standing when the music stops. Enjoying the video so far? Don't forget to hit that subscribe button and ring the notification bell to never miss our exciting contents. Did you know that the interest rates banks offer are negotiable? That's right, banks want your business, and they're often willing to negotiate to get it. So if you're offered an interest rate that feels a bit high, don't be afraid to haggle. Now this doesn't just apply to loans. It's also relevant for savings accounts. Banks typically offer a standard interest rate, but if you're depositing a large amount of money, or if you've been a loyal customer for a long time, they may be willing to bump up that rate. Imagine if you're able to negotiate even a 1% increase on your savings account interest rate. Over time, that extra 1% can add up to a significant amount of money. So, don't be shy. Next time, don't just accept the initial interest rate offer, try negotiating. Ever notice those little fees in your bank statement? They add up. Indeed, banks have a knack for charging fees that can sneak up on you. From ATM withdrawals and wire transfers to account maintenance, every service seems to come with a price tag. And while these charges may seem insignificant on their own, they can quickly snowball into a hefty sum if you're not careful. Let's take ATM fees, for example. You might think, what's a couple of bucks for the convenience? But consider this. If you're using an out-of-network ATM twice a week, you could be shelling out over $100 a year. That's money you could have saved or invested. And then there are those pesky account maintenance fees. Some banks may charge you for simply having an account. It's like renting a tiny virtual space for your money. Stay vigilant about bank fees. They can make a significant dent in your finances. Your credit score isn't just a number, it's a key to better interest rates. Picture this. You're at a bank, and you're applying for a loan or a credit card. Your credit score is like your financial report card, and banks are the strict teachers grading your financial habits. If your score is high, banks see you as a responsible borrower, and they reward you with lower interest rates. On the other hand, if your score is low, banks may see you as a risk, and just like a protective parent, they'll want more reassurance that you'll pay them back. That reassurance comes in the form of higher interest rates. The difference in rates between a high and low credit score can amount to thousands of dollars over the life of a loan. That's why it's crucial to maintain a healthy credit score. Make your payments on time, keep your credit utilization low, and don't apply for new credit too often. A higher credit score can save you a lot of money over time, so keep it healthy. Overdraft fees can be more costly than you think. Imagine this. You're at your favorite coffee shop, you order your usual, and swipe your card without a second thought. But alas, your account balance is lower than you realized, and you've just overdrawn your account. Your bank doesn't just let this slide. Oh no, they hit you with an overdraft fee. And these fees aren't just a slap on the wrist, they can be a real punch in the wallet. Banks can charge $20, $30, even $40 for each transaction that sends your account into the negative. If you're not careful, these fees can stack up faster than a house of cards in a windstorm. But don't despair. Many banks offer overdraft protection services. This safety net can link your checking account to a savings account, credit card, or line of credit to cover any shortfalls. Monitor your account balance and avoid those nasty overdraft fees. Compound interest can be your best friend or your worst enemy. Let's delve into the realm of compound interest, a term that often elicits dread or joy, depending on which side of the coin you're on. Picture it like a snowball rolling down a hill. As it gains momentum, it gathers more snow, growing larger and faster. Now consider this scenario in the context of your debts. The more you owe and the longer you take to repay it, the larger your debt snowball grows because of compound interest. It's a relentless cycle that can be tough to break free from. On the flip side, let's imagine you're saving or investing money. Here, compound interest is the snowball that's working in your favor. As your savings or investments grow, they earn interest, and that interest, in turn, earns more interest. It's a beautiful cycle of financial growth that can help you achieve your financial goals more quickly. Understanding compound interest is crucial to managing your finances. So, whether you're in debt or saving for the future, remember, the power of compound interest is in your hands. Banks have a sneaky habit of hiding terms and conditions. Think of it as a magician's trick, where the magic lies in the fine print that we often overlook. It's like a labyrinth of legal jargon, where the minotaur is usually a clause that might not be in your best interest. For instance, there could be a term about your account being charged a fee if it falls below a certain balance. Or perhaps a clause that allows the bank to change the interest rate on your savings account without prior notice. The key to navigating this labyrinth: always read the fine print before committing to any financial arrangement. It may seem tedious, but it's a small price to pay for financial clarity and peace of mind. Don't forget to hit that like button if you're finding this information valuable. We appreciate your support. Your deposits are insured, but only up to a certain limit. That's right, it's not an endless safety net. Government programs like the Federal Deposit Insurance Corporation, or FDIC for short, insure your deposits. However, there's a cap on this insurance. Typically, the limit is a cool $250,000 per depositor per insured bank, for each account ownership category. Now that may sound like a lot, and for most of us it is. But if you're lucky enough to have more than that stashed away, it's crucial to be aware of these limits. You might need to spread your money across different banks or account types to ensure it's all protected. While the likelihood of a bank failure might seem slim, it's not impossible. So, protect your savings by understanding insurance limits. Remember, in the world of finance, knowledge is your best defense. Loyalty to your bank doesn't always pay off. A shocking revelation, isn't it? Well, let's delve into the details. We often tend to stick with our banks for years, decades even. There's a sense of familiarity and comfort, but here's the catch. Staying with the same bank doesn't necessarily mean you're getting the best rates or services. Banks, like any other businesses, are in it to make money. Your long-standing relationship with them doesn't automatically qualify you for the best deals. Instead, it's wise to periodically shop around for better financial products. There are numerous options available in the market, each with its unique offerings. Some might have higher interest rates on savings, others might provide lower fees, better customer service, or more advantageous loan terms. It's all about doing your homework and making the most informed decision. So remember, don't get too comfortable with your bank. You might be missing out on better deals. Bank-offered investments aren't always a safe bet. Just like a magician pulling a rabbit out of a hat, banks often entice us with glossy offers of mutual funds, annuities, and other investment products. However, beneath the shiny exterior, there may be hidden pitfalls. These investments can come with fees, costs that might gnaw away at your potential profits. Management fees, transaction fees, and even exit fees can add up, leaving you with less than you expected. Moreover, all investments carry risk, and bank investments are no exception. The value of your investment can go up, sure, but it can also go down. The financial market is a roller coaster ride, and the highs and lows can impact your investments. So, before you dive headfirst into the pool of bank investments, make sure you understand the depth. Read the fine print, ask questions, and don't let the jargon intimidate you. Understand what you're investing in. It's your money at stake. Banks aren't your only option for financial services. The world of finance is vast and varied, and while banks might be the most familiar, they're far from the only players in the game. Let's delve into some alternatives. First off, credit unions. These are member-owned financial cooperatives that offer many of the same services as banks, but often with lower fees and higher interest rates on savings. They're a community-focused alternative that often provide more personalized service than their banking counterparts. Next, online banks. As we continue to embrace the digital age, online banks are becoming increasingly popular. They operate entirely online, which means they save on overhead costs and can pass those savings on to you, the customer. They often offer competitive interest rates and lower fees. So, before you settle for the bank down the street, consider exploring other avenues. Expand your horizons. There are more options out there than just traditional banks. Don't be shy, you can negotiate with your bank. It's not an urban myth or a privilege reserved for the elite. Believe it or not, banks are more flexible than they appear. Whether it's about lowering fees or getting better terms, it's always worth a shot to talk to your bank. A simple conversation can often lead to savings. Be proactive, do your homework, and don't settle for less. Remember, it's your money. Don't hesitate to ask for better terms. Let's quickly recap the truths about your money that banks don't want you to know. Your money is loaned out once you deposit it. Banks operate on a fractional reserve system, meaning they only keep a fraction of your deposits on hand. Interest rates are negotiable and various fees can add up quickly, so keep an eye out. Your credit score is critical to the rates you receive. Overdraft fees can be costly, and compound interest works both ways. Hidden account terms can trip you up, and insurance limits on deposits are important to know. Staying with the same bank doesn't guarantee the best rates or services. Bank investments carry risks, and remember, banks aren't the only option. You can negotiate with your bank for better terms and lower fees. Remember these truths. They could save you a lot of money. Thanks for watching this video. We've uncovered some vital truths today, haven't we? Remember, knowledge is power, especially when it comes to your hard-earned money. If you found these insights helpful, there's plenty more where that came from. Explore our channel for more videos that will guide you to financial success. Let's keep learning and growing our wealth together. Don't forget to like, share, comment, and subscribe to our channel. Let's achieve our financial goals together.